lot of uneasy people in those bank towers today, and welcome back to City Online. We're talking about the U.S. economic crisis and how it affects your personal finances with Frank Wigington, a certified financial planner with Tri-Delta Partners. We want to get back to the phone now, and Rose, you're the next caller. Hello, Rose.
Hello.
Hi. Do you have a question for Frank?
Yes.
Go ahead.
This question is for Frank. Frank, I have an investment for $150,000 in the bank, and it's mutual funds only. Now, my husband has the GIC coming due at the end of this month, and he wants to give it to me to put into the account. Now, I only have Canadian funds, no overseas, and should I go ahead and invest that extra $50,000 to my $150,000?
Well, again, it's really going to depend on what you're trying to achieve with this money. If what you're trying to do is get maybe a 6 or 7% rate of return, then you need to choose your investments wisely. GICs obviously aren't going to be able to manage that for you. So right now tends to be a very good buying time if you're going to be holding these things for, at least 3 years. So, sometimes, when you're up at these levels, mutual funds may not be the best vehicle for your investments. You may want to look at some other options, but
like what?
Well, I don't give out specific investment advice, but you may look at things such as exchange-traded funds to give you that kind of diversity. They tend to be a lot less expensive. You might also look at things such as individual stocks and bonds and preferred shares. Again, it's really dependent upon what it is you're trying to do.
Well, I only want it for my old age. I'm 73. Like now I get $920 a month from my mutual funds, which I'm happy with. But I got a statement from the bank last week, and it's gone down to $142,000. And I don't really want it to go under $150,000, but I guess I have no choice in the matter. So he wants to add another $50,000 to this account of mine. Should I do it or shouldn't I?
At 73, I want to make sure that you have enough cash to go and do what you need to do. And I don't want you to be investing all your money and tying it all up in something that may continue to go down. This is one of the big issues that I think that people need to be addressing is how much risk do I really need to take? And she's saying she doesn't want her investments going down below $150,000, and she doesn't get a say in the matter, and that's exactly it.
But they're down now doesn't mean they won't come up.
That's right. But again, we may also see this market continue to go a little bit lower.
Right. All right. Rose, I hope that helped a little bit. I know it's a confusing time, but we are trying to make sense out of it here. Let's go next to Cindy. Hello, Cindy.
Nope.
Cindy, are you with us?
Hi, how are you?
Very good. What's your question for Frank?
Well, my question today is, as a young investor, I'm wondering what would be a good way to invest in the economy right now, or in the markets right now.
So
is it a good time to do that?
How do you get started in the market?
Well, two things. Is it a good time to get started? I think yes. I think this is a great opportunity for young investors who are just starting out to take advantage and buy some really high-quality companies at very low prices. A lot of these companies have been oversold. You look at some of the big banks even, those stocks are paying 5–6% dividends. And these are the Canadian banks, and everybody's worried about the financial sector, but the Canadian banks are in great shape. They've got a lot of cash, and if anything, they're going to go out and start buying some of these other banks around the world that have been beaten up so badly, which is only going to improve their bottom line. There's lots of time for somebody just starting out to make a profit. If you're looking to invest for a year or two, this is very volatile times, and you're taking a bigger risk, so you need to look at that. But if you're going out longer term, this can be a great opportunity to pick up, again, quality companies. You don't need to go after the speculative companies, but quality companies at a very low price.
All right, thanks, Cindy. Let's go next to Michelle. Hello, Michelle.
Hi.
Hi, what's your concern or question here?
Well, I'm going to be investing shortly for my 6-month-old in an RESP to go to school, and I'm just wondering, considering we're just starting into this RESP with the market being so crazy, if this is a good time to go into mutual funds, and should it be a mutual fund that is more like a one mutual fund, you're invested in that, or should it be a diversified mutual fund where it goes from a high equity, and then it slowly moves down into more secure things as time rolls on, but it's automated for you.
Because now this, if it's an RESP, it's sort of a fixed term, right? 16 or 17 years it's going to be in there.
Yeah, it is a fixed term, and you want to look at it and say, am I going to have additional children and things like that? Do I want to set up an individual RESP or a family plan? On the investment side of things, when you're investing small amounts of money and you want an opportunity to participate in the growth possibilities of the equity markets, mutual funds give you that ability. You can put away a couple of $100 a month and you're diversified into 50, 60, 80, 100 different companies, whatever the fund holds, and it gives you that opportunity. If you do have a larger amount of money, you may again buy in an index unit or something like that, which gives you that same diversification. But typically you need larger amounts of money. It doesn't work well if you're only putting in $100.
So is it okay for Michelle to start investing in the RSP today?
I think this is a good time. Yeah. 17 years from now, I think if she's putting away the $2,500 for each child and getting the $500 top up from the Education Savings Grant, I think this is a great time. You know, there are going to be some fluctuations. She's just got to be prepared for that. Right. But in reality, 17 years from now, will it be higher? Yes.
Yes. Okay. Great. Thank you, Michelle. Let's take another break right now on City Online. But we'll be right back to answer more of your calls.